This is fucking bizarre, and I love it. So there's a deal that the Olympic Committee has made with Saudi Arabia to host an Olympic esports in Saudi Arabia for the first 12 years of the Olympics esports. So not a lot more to say here other than they're going to be doing esports as an Olympic event with the International Olympic Committee, and they have a 12-year partnership to do it only in Saudi Arabia, which is something only oil money could buy you, and I am here for it. Okay, next up, we will jump into the games industry report from Convoy, which is VC that is focused on the games industry. So TLDR, if you decide not to watch the next 10 minutes, I will tell you everything that I think are the key takeaways from this report. Number one, investment is normalizing down from 2021 high in 2024. Not surprising. There's a lot of early stage money going into new game companies, but less going into more established game companies, which I think is awesome. What that means is we're having a whole new generation of game developers, which as someone who loves video games and someone who works in the industry, I think this is great. Next, there are a few ETFs that track public market game companies, and both the ETFs mentioned in this report are meaningfully outperforming the S&P 500 year to date, which I thought was really, really interesting. It's something that I was not expecting. Public game companies have a big old pile of cash, both pure play public game companies as well as tech companies with gaming divisions, which is good for an M&A environment. And last but not least, if you look at where VC money is going into new game companies, the biggest deals are going into tech and infrastructure and not content, which I thought was a really, really interesting trend. So without further ado, let us jump right in. First up, the industry at a glance. So overall, the market size is grown nominally so far this year, about 3% to 190 billion-ish, with leading ETFs up meaningfully over the S&P 500. And venture funding is down about 20% quarter over quarter, while round size is also down slightly. Now, a few interesting things. We'll go into the key trends at the end. I kind of have a take on all of them, but we can do a quick speed run here. YouTube and LinkedIn are introducing the game strategy. There's going to be Olympic esports games in Saudi Arabia, which I love and we'll talk about later. Epic Game Store and Fortnite are coming to iOS, on UA, in the EU, and in Japan. We've talked about that a lot. And then a few acquisitions and other things that we'll talk about at the end. Lastly, the most interesting thing from this view is just how massive the Asian games market is in terms of overall users. We know this, but every time I see one of these stats, I'm so mind-boggled that it's larger than the rest of the world combined. Cool. So here's overall game projection. I think this is pretty modest and realistic. We've looked at a few of these game projections that are way, way, way out of line. I think, these guys are projecting that by 2029, we'll hit 225 billion in terms of the overall gaming market. This, I think, is sort of modest growth and reasonable and expected, 3.5% annualized.
Yeah, it's really interesting because if they don't specify, I think that's kind of one of the big questions that the industry is facing right now is where is the growth going to come from?
Right.
Some would say that Web3 gaming is a failed thesis. Mobile free-to-play, I think, is a very stagnant period. And VR gaming is always 1 year away from actually becoming real perpetually, like for the last 20 or so years. So we're definitely in a period where it's like, okay, if the growth is projected, I think there's a lot of unknowns of like where we can safely expect that from. The one exception is I think we are in a really renaissance period for PC and console kind of good old-fashioned gaming.
This is a really, really interesting trend of private market funding over the last couple of years. And I think that this is what I was talking about is like we're normalizing down from the COVID high. If you look at the VC trend, I mean, basically 2021 and 2022 were these gangbusters years for deals, both in terms of VC and other private market transactions. Q2 2022 is the obvious one.
It also strikes me that this chart we're looking at for those listening, the view of funding of gaming in private markets. This chart looks exactly like every other chart. This time period, it looks like the crypto chart for this time period. It looks like my investment portfolio for this time period. It's just interesting how everything seems to mirror the same patterns. It's almost like there's some macro factors at play here.
So this is another interesting view. And what this is showing is the stage of investment. We basically break this into three components: late stage, which is Series E plus, growth, which is B to D, which are basically like usually scaling game companies. Often, if we were working with a VC-backed game company, that's when they'd hire an uptick. And then early stage, which is just pre-seed through Series A, which are most of these games who are developing new games and doing soft launches. And I think what's really, really interesting here is what, as I referred to earlier, how the money had historically in the 2021 cycle gone some of these late and growth stages game companies, and now it's almost completely early stage game companies. What I like about this is confirmation bias for me, and I love confirmation bias. We have seen and worked with a lot of these small scale game companies over the previous couple of years, and it seems like that is where all the energy in the games industry is right now.
I agree with that take. I think it's a very bearish period for medium-sized game companies. I think it's a super uphill battle for them. You either have to be small and nimble, or you have to be able to compete in the arms race for everything from getting the best developers to being able to scale your games with kind of the marketing resources and increased infra that you need to do that. So it makes sense.
One of the other things that we'll look at later, one of the other things we'll look at in a little bit is also where the other money is going as well, which is a lot of this money, this early stage money, is going into infrastructure and like tech plays and not content plays. And I think there's some danger in that. And I guess we can talk about that when we get to that slide. This one is a really interesting view overall. This is aggregated from 2021 to year-to-date 2024. And it shows a similar perspective, which is what stage of the company is getting VC dollars. The thing that's interesting here is the red line. So if you look at the red line, we basically see is 2021, huge amount of investment, particularly in growth and late stage. Over the last couple of years, the investment has really died off, although it looks like we're actually trending up this year as compared to last year. Almost all the money is going into early stage companies. But the thing that's interesting here is the red line, which is percentage of deals which represent 80% of disclosed funding. So what this is to say is how distributed the money is across the ecosystem. In the years 20 and 2021, it was about half as distributed, 12%, which means that a few number of companies were getting a much larger outsized portion of the overall revenue. And that I think is something that is really, really interesting.
So this is yet another view that reinforces that narrative you're saying, Xander, of more smaller bets on earlier stage gaming businesses, right?
Exactly. Another view that articulates exactly what I just said, which is that primarily this view just displays the early stage deals and what percentage of them are early stage deals. And the percentage is steadily increasing from 2021 till today. Okay, this is a really cool view, which I had never looked at or thought of before. So what is this view? This view shows the performance of gaming ETFs, which I actually didn't know was a thing, but they use ESPO and HERO, H-E-R-O. ESPO seeks to track a gaming and esports index, and HERO seeks to track a modified market cap weighted similar index. So basically, there are two indexes that track gaming and esports companies. I think the thing that's really interesting here is that since the correction from the 2021-2022 era, post-COVID era, these game companies have meaningfully outperformed the S&P 500.
Yeah, this is a really interesting view. So we're tracking two different gaming ETFs here. We have one ESPO and one called HERO. And just reading the cliff notes here. So ESPO seeks to track the MVIS Global Gaming and Esports Index. HERO seeks to track a modified market cap weighted global index of companies in video game and esports industry. So you can kind of see what you want in this data. So comparing against the S&P 500, we see that one of these indexes, ESPO, essentially tracked in parity with the S&P 500.
25% over, which is good.
Yeah, with some volatility in there. But HERO is a complete dog relative to S&P 500. So I think it's hard to take too much away from this particular view without more nuance of which companies are within those two ETFs.
Yeah, I think one other interesting trend here is just the fact that they were both drastically overperforming the S&P 500 leading up to and during the COVID period, and that trend has since reversed, which I think is pretty reasonable. The hype around games in that period was insane, and so that makes sense. Okay, this was another interesting view, one I hadn't really thought to pull, but obviously people who focus on M&A think this a lot, and this is the amount of cash sitting in the bank accounts of public game companies and tech companies with gaming segments. So if you look at just the pure play game segment overall, $33.4 billion in cash equivalents. That's a lot of money to do M&A. And then if you look at the major tech companies with gaming segments, it's a lot more cash, but these companies are so big. It's not really a meaningful number in the context of gaming M&A, especially because it'll be really hard for them to do M&A, especially in the US. So I think it's interesting on the game side. It shows that like there is longer term potential and like for M&A, and it could be a healthy M&A environment. The one thing I'll say is like we haven't seen a lot of M&A deals broadly in the US this year. And so, take this data with a grain of salt.
It seems like there's some dry powder for gaming M&A. So I'm curious if we'll see an uptick of that in the next year.
Another view, gaming transactions down 17% year over year. Not crazy to see this. I think that the year is still early. This number could tick back up. We're kind of on pace so far. We're a little down, but not like drastically down year over year if you look at just the last 2 quarters versus the first 2 quarters of last year. But again, the trend remains we're not in the 2021 era, much less we know. Okay, this was the thing I thought was interesting. There's sort of 2 key takeaways from here. These are the largest tech and platform VC deals in the games industry. So 2 things. One, the Asia region is massive, and Asia and North America together make 9 of the top 10 deals. So this is not surprising, but it is just like another data point to show how consolidated in the US and Asia, which I assume is the majority China, is as a region overall. The thing that I will say that's interesting here versus the next slide is that the deals are a lot bigger in the tech and platform VC deals than in the games only deals. And one other thing I wanted to point out to you, Warren, is half the deals are Web3 related. I guess that's my main point. It's just the fact that where is the investment consolidating into? It's still the biggest place where we're seeing VC deals into the games industry right now, which is
and that mirrors kind of what we see in the trenches. Like teams reach out to us a lot more when they're in the earlier and growth stages, and we definitely see a lot more activity in Web3, regardless of if the macro narrative for it is rather negative at the moment.
Well, and it's like an infrastructure play. And that's, I mean, if we're going to criticize Web3, it's like everyone's building infrastructure. Let's build some.
Right.
And like, I'm kind of being disingenuous because we're seeing so many Web3 games relative to where they've been historically. And that's great. But still, it's funny that the money is going into all the infrastructure. Okay. And then just the other side of this is just to say that the largest deals on the game side are on the infrastructure and tech side, not so much on the content side. Content's a way harder business. You'd much rather be the app store than be a game on the App Store. So this makes sense. One of the other things I will call out is half the deals again, Web3 deals.
Yeah, and shout out to one of our clients. Just met with them today, Infinigods, making this top list as well.
Okay, regional breakdown. I kind of want to blow through this one really quick just because I don't think there's a ton that I have to particularly articulate something that's meaningful and differentiated. But I will just say that the Asia market is just so absurdly dominant in terms of VC investment. North America not lagging too far behind, but just in terms of the funding dollars going into Asia versus North America in Q2 2024, it's like staggering. Like honestly, like just the raw dollar amount, it's like as big as the rest of the world combined.
Maybe I'm saying something very obvious, but like at this point in the games industry, is it safe to say that the Asian gaming market is actually more mature than the US gaming market and more forward thinking?
It certainly seems like they're investing quite a bit. I mean, I think they have objectively the largest games company in the world with Tencent. I think you should be very scared about if you're a game developer in the West going forward. I mean, I think the one thing that we have in the West is like we understand our market a lot better. And I think you've experienced this with working on a lot of these Eastern game publishers trying to break into Western markets. It's a different market. It's really hard. But I mean, they're so good. These companies are so good.
Some folks that I know in the VC and M&A world, like talking to them, there is very little excitement currently comparatively for US game development relative to a lot of what's going on in Asia and in Europe as well.
We talked about this a little bit. Asia in Q2, Asia hit a 12-month high, a lot of money going in there. Some of these big VC deals are the infrastructure deals we talked about earlier. This is a really, really interesting one. 61% quarter-over-quarter decrease in investment in North American game companies. It's not great, but I mean, also, it can be noise, right? Like we could have just a bunch of deals that are in the pipeline and we could have a gangbusters Q4 in terms of VC investment. I think people are being, cautiously investing in the US overall just because the election's looming and that can mean a lot of different things for how friendly towards business the country is going to be, how much M&A is going to be allowed, that sort of stuff.
Well, I think we're also, this is a bit of a hot take, but I wonder if we're also in the wake of COVID just seeing less of the idea of physical gaming office hubs in US being such a core part of the business and just teams getting more decentralized, less reason to locate a base within the US to build a strong gaming company. But this is the hottest of hot takes, and I'm not sure if the data actually backs this up.
Well, and I think just like if just cost of living is high here, cost of employment is high here. We at Uptick, we hire globally for exactly this reason. If you can sell into the US market as a US company, I'm doing air quotes there for those listening only, but you're pushing your cost base into lower cost countries. It makes a ton of sense, right? European funding, another thing super crazy here, deal count up, but funding dollars down by half. Good luck to the European market. And then Africa and Australia have basically, in South America, have almost nothing. Last up, we're going to go through a few of the highlights that they call out, and I just want to get Warren's hot take on them. This is like a speed round. First up, YouTube and LinkedIn introduced game strategy. I'm coining a new thing. You know how, Eric Seufert, he's a mobile analyst. Everything's an ad network. That was his thing. Mm-hmm. Everyone's a game company. That's my new. I'm naming it here now. And
we'll see if it sticks.
Yeah, they'll have the distribution piece. We think about it. Like Netflix is a game company, LinkedIn's a game company, YouTube is a game company, TikTok's a game company. It's really hilarious how to be an entertainment company, if you're serious about being an entertainment or even like a networking company, like what business does LinkedIn have getting into games? The one thing I would say here, this is where I pull the data from Gen Z and Gen Alpha. Most of the cohorts of new American consumers who are aging up basically all consider themselves gamers. And so the games industry is eating the entertainment industry, and it makes sense if you're in entertainment that you kind of have to be forward thinking in this regard.
Yeah, LinkedIn moving into gaming. I know we covered this in the past, but it's just so cringy, and it's so LinkedIn. I see the note here that you're only allowed to play the games once per day. It's like, I don't know, LinkedIn is in a really weird spot right now of a time wasting platform under the disguise of you're actually doing something productive there. And this just seems like right in the vein of that, a bit of a scramble on their part. With YouTube, I think it makes a lot more sense just because it is such a native place for gaming content creators, and that's such a big part of YouTube content. But yeah, I think some of these we're just going to see gaming become more synonymous with generalized entertainment. Not breaking any news here, but gaming is far past being niche. It's, I think, as we mentioned earlier, just the default form of entertainment for so many younger people. So it's just going to be more entwined and more a leg of businesses that traditionally had no leg within gaming.
I think you're totally right. And I think places like TikTok and YouTube are actually really make sense as like a native game platform. I mean, you can imagine that you have a short form mobile experience on TikTok or on YouTube. It can fit right into a shorts feed, for instance. There's a few other things here. I think we've covered most on the podcast. So I just want to do one last one, which is the introduction of Olympic esports games in Saudi Arabia. And all I have to say is this is fucking bizarre and I love it. So there's a deal that the Olympic Committee has made with Saudi Arabia to host an Olympic esports in Saudi Arabia for the first 12 years of the Olympics esports. So not a lot more to say here other than they're going to be doing esports as an Olympic event with the International Olympic Committee, and they have a 12-year partnership to do it only in Saudi Arabia, which is something only oil money could buy you, and I am here for it, for any hot takes on Saudi Arabia's Olympic esports events.
The world continues to line up for Saudi Arabia being like the primary remaining liquidity source, it feels like, for everything in all industries. Not surprising. I don't know. My eyebrows raised. I understand why things like this are happening, but I don't know. I think I'll hold my opinions beyond that.
There's a few more interesting sections of this article. We've covered a lot of it on the podcast before, so I don't want to jump into it too deep. We could speculate rapidly about Voodoo and BeReal, but I have no really good hot take there except for they're paying a lot per DAO, and let's see what they do with it.
Thank you, everyone, for joining us for the Uptick Games Growth podcast. As always, it was brought to you by the friendly team here at Uptick. Here at Uptick, we do all things to make games grow, hopefully in a profitable and sustainable way for you, the game developer. So if you are building a great game and need folks to help you scale that profitably, reach out to us through our website. That's upptrc.com.
Talk soon.